Hi, everybody. Welcome to today's Marketing Mastery webinar. My name is Ken Ryan. I'm a senior editor for Floor Covering News. Today's topic, stop overpaying on credit card processing fees, is a topic that every flooring retailer has an interest in. We have with us today our guest expert, Mr. Chad Ogden. He's the CEO of QFloors, to discuss how to stop overpaying on credit card fees. But first, let's bring in our host, Mr. Jim Armstrong. Jim is the founder of Flooring Success Systems. Welcome, Jim.
Hi, thanks, Ken. It's good to be here. I've been on, this is my second time being on a webinar with Chad on this topic, and every time we get very high numbers of registrants. This is something that really is striking a chord with dealers, and rightfully so, because there's a lot of money to be saved here. So very excited to jump into that. Before we do, though, Ken, tell us what's happening in the wide world of flooring.
Well, Jim, we just wrapped up our annual stats issue for calendar year 2023, which I guess to really nobody's surprise showed that the flooring industry was down a little over 10% in dollars as the industry dealt with a slew of challenges. So, Jim, saving some money on credit card processing fees would be a nice change of pace right about now, Jim.
Definitely. Okay, well, we're going to learn how to do that now. Chad, welcome to the webinar, and really excited to jump into this topic. Real quickly, before you jump in, will you give everyone just a quick background on your involvement in the flooring industry?
Yeah, sure. So yeah, before I do that, Ken, I'm just going to collaborate. That 10% number is pretty accurate. We can see nationwide the spending habits, credit card spending habits for people, and it is down 10%. We can see that overall. So that's another data point that confirms what you're saying. My background is my family. My grandfather was the first person to get into floor covering in the 1950s. That translated over into my father, opened up a bunch of stores in Salt Lake, and then of course me and my brothers and my family grew up in it. So I grew up doing it. By the time I got to college, I knew I didn't want to do it anymore. So I went and got an engineering degree and to get out of floor covering. And I was out for 10 years and then got sucked back in. And my brother and my dad and I, there was a need for business software. And so we saw a need for this, and basically we formed a company called QFloors and have been doing that for the last 25 years. And in conjunction with that, over the last 25 years, we have been heavily involved in credit card processing, right? Because it's something all of our dealers, all of our customers need is credit card processing. So we've had the opportunity to go through multiple partners and partnerships and good things and bad things. And, we learned the hard way on a few things. And so I think have a pretty good understanding of what to do, what not to do, what to watch out for. And, just looking forward to maybe helping give some ideas to everyone out there on how this all works and ways that you can save some money.
So we're going to talk, Chad is going to be talking about not only how to save money, but some strategies that you can use to help drastically cut your fees, and some mistakes to avoid that are pretty common, that can kind of get you into hot water, even affect your ability to continue processing credit card payments, and then some common frauds that are happening right now as we speak that you need to be aware of. So Chad, take it away. If anybody has any questions as we go, we'll of course have Q&A time at the end, but I'll keep an eye on the Q&A box, Chad, if somebody has a question or a comment on something as we go. So use the Q&A box, everyone. And yeah, let's jump into it, Chad.
All right. Well, I brought a slide deck. I brought a presentation today, if that's okay.
Yes.
That'll kind of walk us through it. And that way, if anybody wants to take a picture of your screen, you can do that too, with your phone or a screen capture. And I'm sure we can get you this too. So I'm going to go ahead and share my screen here. We've put this presentation together today. Make sure that, okay, here we go. So I already kind of introduced myself. You know, the credit card payment industry is not known for being one of integrity. Let's just put it that way, right? Like, you probably get a lot of people trying to offer you different things, and you probably had some deals that you've been in with credit card processing that haven't been ideal. And people say one thing, they deliver something else. So really, my purpose here today is a couple of things. One is just to make sure that you understand some of the lingo, some of the concepts of what goes into credit card processing, to kind of give a good foundation. So that's why it's Credit Card 101, right? And then we'll go through some other strategies on how to save some money later on. So I want to start by just kind of giving an idea of what goes in to the fee that you are being charged for your credit cards, right? So there's really three parts to this. When you take a credit card, you're going to get charged a fee, and there's three parts to this fee. One is the issuing bank fee, which is a fixed amount. You cannot control that. It automatically gets charged. There's a Visa, MasterCard fee, and an American Express. We'll talk about that a little bit later too. These charges are also fixed. There's nothing you can do about that fee. And then number three, there's a processor fee. And that's the part that is variable and that you can control, and that will come into play on how much you actually get charged for doing your processing. So I'm going to talk about each one of these for just a second. So the first one is the issuing bank fee that you're going to have, right? So you'll notice on all your credit cards, there's a bank that is going to issue this card. You know, it's a Capital One, a Wells Fargo, Bank of America, or, you know, like a local credit union type of card. That there's a bank that's backing each one of these cards. And the banks also give you different types of cards, right? So there could be a travel card, there could be a business card, there could be a cashback card, or just a simple, you know, personal credit card. All these types of, you know, these banks all offer different types of cards to their customers. And every type of card has a different fee that's associated with it. So the business cards or the travel cards, those, you are going to get charged more for one of those cards than, say, like a local credit union or something like that, which will be significantly less, like, you know, 1% less in some cases. So just depending on the type of card that customer gives to you, it will determine a huge rate range for, you know, what you're going to be charged. So that's the first kind of fee, right? And you have no control over what that fee is or the type of card that they're going to give you. Okay. The second one is there is a Visa MasterCard charge that is also fixed. It's a smaller percentage, much smaller percentage, but it also, you have no control over what you're going to pay. They're going to take their piece out of this charge. Okay. And it's a fixed charge. So then that brings us to number three, and this is the processor fee. And this is the one that you do have more control over. And so we're going to go over this for just a second. You should also know that American Express is kind of like its own bank, right? So it's a little bit different from Visa and MasterCard, but in a sense, you don't have control over what they're going to charge you either, okay? So they're kind of, the bank and the kind of network fee are all combined together, and then you still have a processor fee that will go on to American Express. So let's talk about these processing fees, the part that you can control. I've split this up into three different kinds of fee strategies that when a salesperson comes in to sell you credit card processing, they're probably going to try to pitch one of these three types of strategies to you. Okay. So let's flat rate, cost plus, and surcharge. And we're going to go over each one of these. So let's go to flat rate first. Okay. I'm going to use an example from the floor covering industry to try to illustrate when we say a flat fee for credit card processing, what we're actually talking about. Okay. So let's say that we have this display, this nice wood display out on our floor. And at the very top, it says $5 a square foot for any product. You can choose any one of these 4 products, 5 products on here. Doesn't matter. It's $5 a square foot, right? Well, the thing about it is the very top one has a $1 per square foot cost. The second one is $2. The third one is $3, and the fourth one is $4, right? So that is the cost to the dealer would be different for each one of these. But yet at the top of the rack, they're saying, you can just pick any of these and we'll charge you $5 a square foot. It doesn't matter which one you pick. So obviously, you know, the dealer is going to want them to pick the first one or the second one most of the time, right? And they're going to count on that you're going to pick the bottom one not very much. And so, you know, they've adjusted this $5 per square foot price up here so that they're going to make sure that no matter which one you pick, they're going to make money. Okay. So that's kind of the idea. So when we come to a flat rate display, $5 per square foot. So when we come to credit card processing, if we have this same concept here, let me go back just a second. If we have the same concept, if a credit card processor comes in and says, we're going to charge you a flat rate no matter which credit card you take, it doesn't matter. 2.75%, 2.8%, we'll do it flat. And I don't care if it's a business card, I don't care if it's a credit union card. Well, in a sense, that's what the same thing that's happening here. They're pitching that it doesn't matter what kind of card, we're just going to charge you one rate. Okay. So the thing about this is for a small portion of the dealers, this is a good deal. You know, and it's for the dealers that live in very affluent areas where they're going to take high rate credit cards a lot. You know, they're going to take, you know, the business cards and stuff at a high rate. Well, that's because the smaller or mid-sized dealers are going to be subsidizing the plan for the people that are taking high rate cards all the time. Okay. So this is good for people like in New York, stuff like that. It might be a pretty good deal for those kinds of dealers. And for the very smallest dealers, a flat rate might not be a bad deal either, because very small dealers usually get charged a little bit higher rate than everybody else. So, but overall, the majority of dealers, this is not a good deal to take a flat rate, choose a flat rate type of plan. So it's good for small numbers and not so good for the masses, right? So bad for the majority of the dealers. There's one other kind of flat rate, and then I'll let you ask a few questions here. This is called a tiered flat rate, which is the same idea as just one flat rate, right? So sometimes the salesperson will come in and pitch you, hey, you know, if it's this kind of credit card, we're going to charge you this flat rate. If it's this kind, then it will be this flat rate. And if it's this kind one, then we'll charge you this flat rate, right? So maybe like this, 3 different racks, 3 different flat rates, but which is better, right? This is better than just one, but still, it's probably not ideal all the time, right? They still have to charge you enough to cover if you happen to start taking a lot of high rate cards. Okay. So any questions on that flat rate? Is that pretty clear, Jim?
Yeah, no, that is clear. And I like your illustration that you used on the flooring display there. And it makes perfect sense that Well, actually, what you're highlighting is why you need an expert who's familiar with the way credit cards work to kind of analyze what you're doing. And I know that's something that you do, Chad, and we'll get into that later.
Yeah, I guess I'm just saying the majority of the time, if somebody's pitching you a flat rate, it's probably not the best.
Yeah.
There's some instances where it is, but not always, right? Okay. So
We've got a question
got a
here.
quick question.
This is from Michael. He says, first of all, nice presentation, Chad. Isn't the real question as a retailer, are you willing to give up 3 cents per dollar to not have to process checks and walk into banks? Also a cost attached to that. Can you explain taking checking account numbers and the lower cost?
So we'll get to that. Yeah, that's
Okay.
a great question. That'll come later in the presentation. So thank you for that. So let's go on to the next thing that a salesperson is going to pitch you on, and that is what we call cost plus. So this is a different type of strategy. You've probably heard somebody throw around the term basis points before. Basis points just means that is the percentage that they're going to charge you when somebody gives you a credit card. So the idea of cost plus is they're going to take the cost of processing that card, and then the markup to process that card will always be the same percentage or the same basis points. Okay, so that's why they call it cost plus. So if you're taking a lot of low rate credit cards all the time, then your overall cost is going to come down quite a bit. If you're taking more expensive credit cards all the time, well, then that plus will be just on top of the more expensive one. So basically, it's a strategy where you're just going to pay for the credit cards that you're being given, whether they're expensive or cheap, and you're not going to pay more, if you're getting cheap cards all the time. Okay, so this is cost plus, and you'll see over here on the left side of the screen, this is kind of these basis points. If it's 10 basis points, you can see it's 0.1%. 100 basis points is 100%. Okay. I will say this, the amount of basis points that you're going to be quoted by a salesperson is going to be determined by your annual volume of credit card processing. So if you're a big dealer that's processing a ton of credit cards, you're going to get a lot lower rate than if you're a really small dealer that is only taking 5 credit cards a month. Okay, there's a difference in the basis points that you're going to be quoted, and it's usually based upon your volume. Okay, so for example, if somebody came in and said, I'm going to charge you 60 basis points, okay, what that really means is 0.6%, or on $10,000, it would be $60. Okay, this is how you calculate it. Okay, so if you were at 30 basis points, it would be $30. I can tell you that 60 basis points is usually on the upper end of what somebody would be charged, like a really smaller store would be up in that range. The bigger stores are going to be more like down in the 20 range. If you're below 20, then you're getting a pretty good deal. Okay, so that's kind of just to give you kind of an idea of what you're looking for here. One other thing that you really need to be aware of that processors are not going to tell you about usually, and that is bad zip codes. Okay, most processors, sorry, that was my telephone. They're just, if you type in a bad zip code, they're just gonna I don't know how to turn my phone off here. If you type in a bad zip code, they're probably just going to accept that that payment, and they're going to process it through. Every time you type in a bad zip code, it's going to cost you about 50 basis points. It could even be more than that. I've seen up to 75 basis points. So for example, on this credit card example right above here, where it was $60, if you took a bad credit card, or I mean, if you didn't type in the right zip code, instead of $60, it would be $110 or more than that, almost double what it should be, right? Just for typing in a bad zip code. Most processors will not tell you. They'll just say, oh, it's a bad zip code, I'm just going to charge you more. So one thing that you really need to pay attention to or look at is your processor going to stop any payment that is put through the system that does not have the correct zip code attached to it? So it's just, most people do not. The processors do not want to hold up any payment for any reason, right? They just want it to sell through, and if you're not smart enough to put in the right zip code or whatever, then they're just going to let it go right on through, and they're going to get twice what they probably should.
Well, let
Right?
me ask Chad, this brings up a question, Chad. If maybe you know this, maybe you don't, but I thought that the whole point of the zip code was to provide added security. Like if you get the wrong zip code, that means, uh-oh, it's not this credit card might be stolen or something.
Yep, that is correct. And so that's why they're going to charge you 50 basis points for the wrong one, because the security risk is a lot higher, right?
So they're not they're not preventing fraud. They're just adding more cost to you in case it might be fraudulent.
Exactly. You got it right. That is exactly what's going on here. So you really need to make sure that that your credit card processor is notifying you and before the sell goes through that the zip code is bad. We do that.
Let me ask you, this just brought up another question, Chad, that I just thought of. Is that a setting that you can do with any credit card processor, or do some just there's nothing you can do about it?
I think if you know to request it, that you can request it with most everybody.
I see. Okay.
Okay. So I think that that's the case, but most people, you have to request it, right? You have to know to request it. When we set somebody up in our system, that's our default, and they would have to request to have it turned off. Okay.
Makes sense.
All right. Thank you. Yeah. Thank you for that. Questions. So this is cost plus, right? So now we're going to go to the third strategy here, which is called surcharging. Okay, this is kind of new, but I think most people are starting to get a feel for this. The idea here is that the dealer is going to pass the processing fee on to the customer instead of them paying for that processing fee. Okay, so if a dealer selects to go to this surcharging strategy, I should say, it will cover the majority of the dealer's processing fees. It doesn't cover everything. That's kind of maybe a fallacy that is out there. It's not a complete 100% cover, because there are going to be other charges for other kinds of fees, like for debit cards, ACH payments, monthly account fees. So it doesn't cover 100% of everything, but it really does drastically reduce what you're getting charged. Okay, and I'll go over that here in a second, what you would actually save. But the one thing that you need to know about surcharging is it's highly regulated. Okay, we see this all the time. You can't just be a dealer and say, I'm going to surcharge this customer, this time on this deal, and I'm just going to do it myself. This is a regulated thing that you have to follow certain procedures and certain regulations for this to be legit. Okay. The first one is you cannot charge more than 3%. We're still seeing some people out there that are charging different rates and more than this. I had one last week that was in Texas charging 3.5. This is a regulation that as of last April, it was changed to 3%. Before that, it was 4%. So anybody charging over 3% now is out of compliance. Okay, so that's one regulation. The second thing is you need to use a processor that supports surcharging. Most processors nowadays have some kind of a program but you just need to make sure that your processor supports a surcharging program. Okay. And there's some things that they're required to do with that, but we won't get into that here. The other thing about this that really is probably a big deal in surcharging is the dealer is not allowed to make any money on a surcharge. Okay. So this is kind of like sales tax, right? The 3% surcharge that you're charging that customer to cover the fee, you have to remit that whole 3% back to the processor. Okay. So it's kind of like sales tax. You can't charge 7% and only give 5% back to the state. It's the same idea. Okay. Because of that, a huge mistake that many dealers make with this is that they will just say, oh, and they write up an order on a sales order on a ticket for the customer, and then the customer says, oh, I'm gonna pay with a credit card, and they say, oh, well, I'm just gonna charge you 3%. So they'll go down on an invoice line on the sales order, and they'll just put 3% on that line, or they'll charge them whatever they want, 2.5 or 3.5, whatever it is. They just kind of put it in there. And they decide, I'm going to do it on this one, maybe not on that one. You know, it's just kind of whatever they feel. This is a bad idea. And the biggest reason is if you are doing that outside of a regular surcharging program, you are making money on that surcharge most of the time. And so that goes outside of the regulation. So I'm just saying, for the majority of you, if you're just going onto a sales order and saying surcharge 3%, you're probably out of compliance already. Okay. And I will just add in here that the best way is to get some software that will support surcharging, that will take care of the collecting and the remitting of the surcharging, so that you can be in compliance and you're not trying to figure that out yourself. So you need to really have a program that supports surcharging. Okay. Let's see. The last thing is that you must prominently display in your store on a sign, on multiple signs is preferable, that you are a surcharging store and that the rate that you charge is X amount, right? Again, should not be over 3%, can be under, but that's something that you need to do. And then if you're going to do this, you have to, like I say, line this up with your processor, let them know that you're going to go and do surcharging, and go from there, right? So there's these regulations that you need to follow. So what does all this mean? Okay, so you have salespeople that are reaching out to you all the time about credit card processing. So here's some things to keep in mind. Okay. Surcharging. A dealer can save a ton of money if they implement surcharging in their business. Okay. Let's just give you some ideas here. You'll probably reduce your credit card fees depending on the mix of credit versus debit and stuff like that, but it's probably going to be at least 75% of your current bill. Just an example of this, we have one dealer in 2001 that was paying $156,000 a year. And I'm telling you, it took us hours to convince him that this was legit, right? Now, this is 3-4 years ago when, surcharging was just kind of getting started. But, in his first year, their bill was $36,000, or they saved $120,000 in saving. If you talk to him today, would he ever go back? There's no way he would ever go back to anything else.
So Chad, I would, a lot of, so everyone knows I do coaching for flooring dealers. My company, we provide marketing services and coaching. And I was on with a client just yesterday, and he implemented surcharging just this year, and to date he's already saved $50,000.
Yep.
Yeah, so this is definitely legit, and something I think you should be doing it.
Yeah, and these are a little bit bigger stores. If you're a smaller store, obviously it's not going to be that, but take what you're paying in processing today, Take 75% off of that, and I think you'll have a pretty good idea of what you could be saving.
Yeah. This dealer, it was around the 3.2 million, something like that.
Well, that he was getting paid a lot or charged a lot more than for his credit card processing.
Yeah, for
So,
sure.
I mean, that's significant. I think this dealer that I'm looking at here was over 10 million,
Gotcha.
something like that. Okay. All right. So, some other things to consider. Cost plus is the next best option. So if you don't want to do surcharging, which some people feel awkward because let's say the Home Depot down right next to them is not going to charge a surcharging fee or whatever it is. So if you don't feel like you can go the surcharging route, the next best option is cost plus for the majority of people. Okay. Now I'm just talking in generalities, but the majority of people, this is what you should be looking to do. Flat rate is probably the worst for most dealers. Like I said, a really, really small dealer, it might be the right thing. Dealers in very high affluent areas might also be a good option. Okay, but for most dealers, not. Okay. Another couple of things to consider. There are things called junk fees out there. And what will happen sometimes, let's say that you're on cost plus. Sometimes people come in with a really low basis points, but then they'll put in these junk fees that are really not real at all, but they just do it to make up for the really low basis points, right? So one example of this is PCI certification. That's not a real fee. If that's on your bill somewhere, you should call them and tell them to take it off. Things like that are not real. There are some real valid fees like a monthly connection or a gateway fee, usually 40 to 50 bucks. That's a real fee. A per transaction fee is also a real fee, for every transaction, but it should be in the 10 to 20 cent range if they have one. Okay. So those are just some of the things to kind of look out for. If you want us to analyze your statement, we are more than willing to do that for no fee at all. It's a service to you. If you want to know if you're getting overcharged, if there are junk fees that you shouldn't be paying, we're more than willing to take a look at your statements and give you those kinds of tips. So if you're a QFloors customer, you can just go through our normal sales at QProSoftware.com. If you're not a QFloors customer, please email info@mountaintoppayments.com, or you can go to that website and there's a phone number you can call there too. So here's just some, take a picture with your phone if you need this at all. Looks like we have a few other questions here.
Yeah. So two of them are similar. Wouldn't one, Beverly asked, wouldn't the company who uses surcharging risk losing the customers to companies who do not surcharge? And then another person asked something similar. My problem is my competitor is not doing that, and I'm afraid to the fears that I will lose jobs. I have an answer for this, but Chad, you go first because I definitely have some thoughts on this.
Me go first, huh? Jim, you're probably closer to the dealers in that respect, but we've had webinars amongst our customers and stuff, and with the same type of question. I brought up the Home Depot example right there. I think if you're going to go to surcharging, you have to be committed to it. It can't be kind of like a wishy-washy type of thing. And I know the people, I'll just say it this way: the people on our customers that have gone to surcharging, I've had less than 5% that came off of it, meaning that once they committed to it and taught their people and their salespeople how to pitch it and how to resolve any concern that somebody might have, and once they do that, the customers understand that that this is something that they can use a debit card if they want, or they can, there's other kinds of payment methods that they can use. I will say this: when you are in surcharging, I didn't really bring this up, but one of the regulations is that you have to provide another alternative payment other than credit cards to make that payment for the purchase. So that would be either a debit card option or an ACH option, right? That they can electronically give you either of those. So check, paper check is also, but most people aren't doing that nowadays. So I just add that in. All right, Jim, you go with how do you resolve this concern?
All right, it's actually a larger question, and that question is how do I sell at prices higher than my competition? Okay. And because that's what you're essentially doing is you're charging more than what your competitors charge, supposedly. Now, you got to be first of all, you got to be really careful. You may not be, okay? Their advertised prices are not always what the customer winds up paying. There's a lot of bait and switch and et cetera, et cetera. However, setting that aside, you need to position your company such that you make yourself the obvious choice. Okay. So to those two people who have asked this question, I'm sure there's more on here who have, are silently thinking that question. Wow, am I going to lose business doing this? You need to ask yourself, what's your unique selling proposition? What makes you everybody write this down. Every prospective customer has an unspoken question. And that unspoken question is this: why should I buy from you versus every competitive option available to me, including doing nothing? I learned that from Dan Kennedy a long time ago. Why should I buy from you versus your competitors? Their unspoken question. The dealer that answers that most effectively not only is going to outperform their competitor, they're going to be able to sell at prices higher. So how do you answer that question? If your answer to that question is because we're the cheapest, well, you're on a race to the bottom. You need to find other answers to that question, and there are other answers. And once you answer that question, this becomes a non-issue. The surcharging, it's not even an issue. And my client that's doing it, Chad's clients that are doing it, Chad, you said that 25% of your clients who are taking credit cards are now doing surcharging. Is that correct?
Yeah, just a few years ago it was at 10, and now it's at least double. It's between 10 or 20 and 25%. So over the last 2 years, we're seeing adoption as people are starting to feel more comfortable with it, right?
Yeah. So it's possible to do. It's been proven it can be done. You need to sell on something other than price.
Yeah.
And that's my kind of long answer. Paul's got a question here. How would we put in a request for our processors to notify us when we enter a zip code incorrectly rather than charge us double as a consequence?
You just need to call your processor and say that I want the term for it. The actual term is called AVS, address verification. AVS. You just say, I want that turned on for zip codes. And so I want to be notified before a card goes through the system, before you actually accept the card, that the zip code's bad. And that's all you have to do. And then they'll tell you whether they can. Almost everybody can, though. They should. If they can't, then let's look at a different option.
Maybe a red flag.
Yes, that's what I'm saying.
Yeah.
I will say this too about this. If you want us to do your statements, if you're looking at surcharging, this doesn't matter. The only reason we would look at anybody's credit card statements is if you're thinking about doing cost plus or flat rate or something like that. So if you're doing surcharge, your statements don't matter anymore, right? Doesn't matter.
Got another question. Rick is asking, is the zip code all you need, or do you need to get the full billing address?
Okay, great question. So the zip code is the only part that affects the rate. If you should put in the address too, but if you've got an address that doesn't match, they should be able to still send that through without declining or anything. It will not affect your rate if the address is wrong.
Well, I tell you, that just puts the whole lie to the security thing. I mean, if you could put in a wrong freaking address and it still goes through, this isn't a security measure. This is a profit measure for these guys. I mean, they love it when you put in the wrong zip code. That's just more money for them.
Yeah, the zip code matters. The address doesn't.
Huh.
Now, in our system, we notify you if the address is not right, because that's going to go to our next topic, is stolen credit cards, right? So it's good to know that the address is not right, but it won't cost you any more if the address is wrong. Here's another thing that most people don't know. The name, where it asks you to type in the name on the credit card, nothing about that. Like you could type in, Jerry, whoever, and it will go through. It doesn't matter. The name is not checked.
Wow.
Just so you know.
It's like overdraft fees. The banks love it when you overdraft. Are you kidding me?
Yes. So anyway, are there any specific laws that restrict surcharge? Okay. So this is a good question. There are a couple of states out there that are kind of wacko with surcharging. I shouldn't say that. How would I say it?
They're difficult.
They're trying to be more difficult with the surcharging thing. The ones that we know of that, I'll just give you a hint. They're all New England states. Consequently, New York, the one that we were just talking about, Connecticut, let's see, Maine, Massachusetts. California is a little bit weird, but we have not had any problems with. We've got tons of customers in California that are doing surcharging. Not a problem right now. So I wouldn't, as long as you follow the regulations that we're telling you about, as long as you're doing that right, you will be just fine. California is always weird with everything. They have environmental charges, care charges. Who knows? They don't even know. Like, don't get me going on California, right? Like I don't even think they know who's doing what down there. So I would say if you're in California, as long as you're following the regulations that we're talking about here, you'll be okay. The same with New York in that you just need to make sure you got to be following the rules up there specifically, because they're onto the surcharging stuff and they're watching people up there. Okay. So just do it right and you should be okay. Okay. Did that answer? Hopefully. How do we account for surcharging fees in our estimates so our clients aren't being taken by surprise when they pay with credit card costs higher than what we give? So, I mean, I think it's pretty much simple like this. You write out the ticket for them, and then when you come to you have to have displayed in your store that you're a surcharging store, right? You're going to charge this fee. So they should be able to see that up front. But then when you're writing up the ticket and when they go to pay for it, you're just like, all right, so how would you like to pay for this? If you use a credit card, we have our surcharging fee. You can give me an ACH, which is nothing. That's the one that you probably want to go to next, is a ACH electronic payment, because that would actually be lower than a debit card. So now if you're on a surcharging plan, surcharging's the best for you, for the dealer. The next best is an ACH electronic payment. And then the third best is a debit card. A debit card is almost twice as much as an ACH payment. Just so you know. So surcharge, ACH, debit.
Okay.
So that's how you do it. Okay. Good questions. Good questions. All right, let's go on to the next slide here. All right, so here's the other thing that I wanted to make everybody aware of. Every time I talk about this, I try to bring this up, make sure there's an awareness. There's a common scam that's going around the floor covering industry. When we were in our users conference last time, I asked how many people had been taken by this scam, and over half of the room raised their hands. It was like 60%. And so, if that's any kind of indication, more than half of the people, more than half of the dealers in this industry have already lost money to this same scam. Okay. So try to create awareness so that you're not the next person. And I'm getting 1 to 2 people, 1 to 2 of my customers every month that call me about this, that they've just gotten scammed. Okay. So please be aware of this. Okay. Here is the scam. First of all, it's going to be a cash and carry deal. Somebody's going to call up and say, hey, I need, well, here, let me just say it. This right here. I need, most of the time it's like hard surface. I need a gray LVP, what you got? I've got this apartment complex out here. I ran out. I just need something really quick, right? And then the dealer's like, yeah, I've got this stuff in stock right here. What's the price point? They're like, as cheap as you can, but I don't really care. That's just kind of how they couch it. And then they're like, okay, I've got my credit card here. Let me just give it to you over the phone. Everything's in a rush. Everything's quick. The salespeople think that they scored this cash and carry deal. The people don't care what the price is. It's almost too good to be true all the time, right? A lot of times in this scam, they'll just say, hey, I need to do a couple of units or something, or I need to do this spec house. And it's usually only for $1,000 or $1,500. So they'll try that first and see if you'll go for this lesser amount. And then a day or two later, they'll say, hey, I've got these other units I've got to do now. And then they'll up the price to $10,000, right? So they'll try you first at a lower price, make you feel comfortable, like everything's going to be fine, blah, 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 blah. And then that's what happens, right? And then they'll want to give you their credit card information over the phone, okay? And they'll tell you their installer will come pick it up, okay? If this sounds familiar, the card is high probability the card is probably stolen that they're going to give to you, okay? And it hasn't been reported stolen yet by the person, okay? You should know that the dealer is responsible for taking the stolen credit card. So if you take the card, you process the card goes through, it looks like it's valid, and then they come pick the stuff up. Then a week later, you get a call from the processor saying, hey, that was a stolen card. You have no recourse. They're going to take that $10,000 back out of your bank account, or however much you charged on the card. Okay. So it's pretty standard. I mean, there's variations of this, but this is a pretty common thing. Okay. I will tell you, I'll just really quick give you probably the worst case scenario, which just happened to one of my customers 2 months ago. They were very casual in this, and they didn't do 10,000, they did 80,000, right? They took like 7 or 8 different orders within a 7-day time frame. Now, they did not deliver the 80,000. I think it was only 20 before they found out it was bad. But that wasn't the bad part about it. The bad part about it was the processors saw this dealer as a high risk, and they immediately shut down their account so they could no longer process credit cards. No, not only that, but they blacklisted this dealer so they couldn't open up a credit card account anywhere else. Okay, so this is kind of a worst case, but this is serious. I'm trying to point out that you don't want to screw around with this, right? Because it can affect your credit, it can affect a lot of things, and it could even get you blacklisted, right? Same thing with like not following regulations with, surcharging, like we were just talking about, right? You don't want to be screwing around with this stuff so that you get your account shut down and possibly not being able to open up another account. So, we're just cautioning you, please, with credit card stuff, just follow the rules, be careful. And then I have this website that if you have want more information on what do you do, how do you tell if there's a bad credit card? We don't have time to go over everything right now, but if you type in Google credit card scams, QFloors, it'll take you to this article, credit card scams. And there's a bunch of different things that tips on there that we give to people to minimize, if they think that it's a bad credit card, things they can do to try to minimize taking a bad card. So just go to that website and there's, 10 different things on there that you can be aware of. Okay. All right, just type in credit card scam QFloors. There's some ideas there. One last thing, I will just say this is just a tip. Nowadays, most people with credit card processing, they have the feature where they can send a button that people can press on their sales orders and stuff like that. They can email, where they can press on that button and the consumer can type in their own credit card information. They don't have to come into the store. You don't have to call them, get it over the phone. These kinds of things we're finding that your accounts receivables are going down quite a bit because you can collect money a lot easier. So these integrations with business systems and these advanced ways of taking credit cards are things that I really suggest that you kind of look into. So that's kind of the bonus tip. How'd I do? 50 minutes.
Fantastic.
Great.
So we've got a comment here from Melina. She says, we had two different people ask for floors that state they live in a different state and bought a house out near us, and that they need LVP flooring. We stop that and try to get more information. Where's the house at? We need to look at the job before we can provide an estimate, etc. Luckily, we have been great gatekeepers that deter them from proceeding. What they have said is that they will send a check. So anyway, that's Melina's story.
Yeah.
I'm sure you hear all kinds of things, Chad.
Yeah, there's a lot of good tips, make sure that you get their ID, that their ID matches the credit card, that the zip code is, that they're giving you for the credit card or whatever is close by. It's not from another state or another town. Just there's a lot of things that you can do to try to minimize. And I mean, if you know the people, then it's not a problem. But usually this is somebody that you don't know, right?
So Chad, let's open it up again for questions if anybody has one. In the meantime, Chad, while they're typing their questions in, if anyone wants to get more information or have you run that free review of their statements, or have any questions or anything, tell them how they can get in contact with you again.
Yeah, I would just say this. Let's see if we can come back to this screen right here. This is the best way. If you can go to our website, qfloors.com or mountaintoppayments.com. If you're not a QFloors customer, that's the way to get a hold of us, is at either of these websites, right?
Okay, great.
Get a hold of us. So
fantastic. I encourage everyone to do that. Chad will help you. I've been working with Chad. God, we've known each other for at least 8 years, Chad, and he's been in the industry forever. He's legit. He's the real deal. He's not going anywhere. And this is all, everything he's talking about is very legit. He's got a very solid company. And so I highly recommend that you take advantage of Chad's offer. Just have him take a look at it. It's not going to hurt anything. Have him take a look at your statements, see if you're overpaying. You could wind up saving a lot of money. All right, a couple of questions. Can dealers call banks to verify transactions?
So yeah, so on the back of the credit card, so you could have them give you the back of their credit card, or there's a number that you can call there to call the bank that issued the card. And you can say, hey, I suspect that this could be a fraudulent charge. Can you call the customer and confirm that they are buying flooring? The smaller banks, the more community type banks, the more customer service type banks will do that for you. We just had one with a Capital One card. They refused to do it. So I think it just kind of depends on the card, who's issuing the card. It's crazy that they wouldn't do that, but that's what you want them to do, is give them the credit card number, have them call the customer, and have them verify that they are buying flooring.
Excellent. If the customer has never physically been to your store, do you need to have a surcharging notification in your sales agreement or contract somewhere?
that is part of the regulation, is you do have to have on your sales agreement, you have to have a surcharging statement on there.
Okay. And I'm sure you can help them with what that statement needs
Yeah.
to be, all that good stuff.
Yep.
Okay. Well, that's it. We don't have any more questions here. This has just been super informative. This is my second time seeing this presentation, and I learned a whole bunch again this time too. So, Chad, you really know your stuff. This has been really valuable, and thank you so much for coming on.
Great, I love it. You can tell I have a passion for this. I think it's just that I've been down some bad experiences, and I think our industry deserves better than that. So
yeah. All right, Ken, I'll let you take it away.
Well, to your point, Jim, that was extremely informative. I learned a lot as well, and it was a quick 50 minutes, I'll tell you that. But thank you, Chad, again for your expertise and for your time today, and for everybody out there who took part for this webinar. And we'll see you again soon. Okay. Have a great day.
Thank you.
Thank you.